Hello and welcome to Oil Asset of the Day for the 10th of December, presented by myself, Phil Carr, at the Gold and Silver Club. So as we go into a new week here, we of course have come off the back of last week, the OPEC announcement with respect to additional cuts, which will come into play into 2020. Now it's been interesting because we haven't seen a great deal of follow through from the breakout above $59 per barrel on Friday for US oil. In fact, US oil right now is trading back near $58.60 per barrel. In the latest week, hedge funds and money managers, they have trimmed their net long positions yet again. We're also seeing at the start of the week here, oil really struggling to maintain the gains that it made into the close on Friday. So I would look out for the potential this week for again more range bound trade, but for a rotation back towards the 57.50 to 57 US dollar per barrel handle. Now I am looking at resistance coming in at $60 per barrel, and as always, you need to be keeping nimble at the moment. We've got more volatility coming up with major news items such as the FOMC statement this week, but also the API data and Wednesday's oil inventories as well. Now we have seen yet again oil catching a bid as it's seen a rotation back towards major magnetic levels of support around that 55 and 56 US dollar per barrel handle, but at the moment the momentum is looking bearish, so we are starting to run out of steam here. I am looking for a rotation back towards those zones. I would suggest that oil can be played both ways at the moment. So right now we're mid-range. If we get a rotation, continue to break back below 58, I would look for a move back down to 57 US dollars per barrel. Once we hit that level, if we do see buying evidence come in at 57, we may then see a rotation and break back out towards $60 per barrel. Usually this time of year, from a cycle point of view and seasonality as well, does tend to be more bearish for oil. And just bear in mind that these output cuts won't really get put into place until we move into 2020. And of course, there are still concerns about oversupply coming from non-OPEC members. But the major news item that you must keep on your radar over the next week is going to be the US and China trade tariffs, which are supposed to be coming into effect from the weekend, from Sunday through to Monday. Of course, if that does go ahead, expect that to have a negative impact on oil. But at the same time, if there is to be a resolution and a deal put in place, that's where oil, of course, can catch a bid. So as always, you want to be very nimble, take advantage of the current volatility. It does provide great opportunities to trade oil in both directions, but be aware of the levels that we're looking at for this week. So again, that support coming in around the 57 US dollar per barrel handle, and of course, resistance coming back in around $60 per barrel. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.